Hey everyone, welcome back to Corporate Decoder. Today VZ just filed its annual report and I'm seeing some interesting trends in their savings and security plan that tell us a lot about employee involvement and the company's financial health. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing gives us a window into how Verizon's employee savings plan is doing, and the numbers reveal a steady, well-managed plan that aligns with the company's overall stability. Alright, we are diving into the Verizon savings and security plan for New York and New England associates. This is essentially a look at the health and management of the retirement savings for many Verizon employees. Think of it as a financial report card for their 401k and similar plans. Let's start with the core financial statements here. We are looking at the statements of net assets available for benefits as of the end of 2025 and 2024. These tables show us the total value of the plan assets. In 2025, the total investments available for benefits climbed to $6.17 billion, up from $5.76 billion in 2024. That is a healthy increase, showing growth in the savings of Verizon's employees and the investments made on their behalf. A big chunk of that value comes from what is called the plan interest in Verizon Master Savings Trust. This means the plan itself has a stake in a larger pooled investment trust managed by Verizon. This figure grew from $5.24 billion in 2024 to $5.67 billion in 2025. This trust holds a wide variety of assets and is a key indicator of the plan's overall performance. We also see notes receivable from participants. These are basically loans that employees have taken out from their own retirement savings. In 2025, these loans totaled $124.5 million, a slight decrease from $132.1 million in 2024. A decrease here is generally a good sign. It suggests employees are either repaying their loans or taking out fewer loans, meaning more money is staying in their retirement accounts to grow. Now, let's look at how these assets changed over time with the statement of changes in net assets available for benefits for the year ended the 31st of December 2025. This statement breaks down where the money came from and where it went. The biggest positive driver here is the net increase in plan's interest in Verizon Master Savings Trust, which added $696.7 million. This figure represents the investment gains, including both the appreciation of the assets and any income like dividends and interest earned within that master trust. This is a strong performance, showing that the investment strategies within the trust are working well. On the income side, we see participant contributions totaling $158.5 million. This is the money employees themselves put into their retirement accounts. Then there are employer contributions of $59.1 million. This is Verizon matching or contributing to their employees' savings, which is a crucial benefit. The total contributions for the year were about $217.5 million. On the outflow side, benefits paid to participants were $506.7 million. This is the money being distributed to employees who are retiring or taking distributions from the plan. We also have administrative expenses at $5.5 million. While necessary, these are costs that reduce the overall net assets. The net result for 2025 was a net increase of $410.8 million, which, when added to the beginning assets, brings us to that $6.17 billion end of year figure we saw earlier. Looking at the details of the investments within the master trust, we see something interesting. A portion is listed as investments at contract value. This typically refers to fully benefit responsive investment contracts, like certain guaranteed investment contracts from insurance companies. In 2025, these totaled $380.7 million, a slight decrease from $386 million in 2024. These are generally considered lower risk and provide a stable floor to the portfolio. Digging deeper into the master trust itself, the total investments in the Verizon Master Savings Trust at fair value in 2025 was a massive $41 billion, and Verizon's plan had a significant interest of $6.06 billion in that. The previous year, the total trust was $38.3 billion, with the plan's interest at $5.63 billion. This shows substantial growth in the total pool of assets. Within that master trust, common stock makes up a huge portion. For the plan's interest, it was $906 million in 2025, down from $1.42 billion in 2024. But this is just the planned slice of the overall common stock holdings. The total common stock in the master trust itself saw a significant decrease in valuation from $9.7 billion in 2024 to $6.13 billion in 2025. This could reflect market conditions or rebalancing within the trust. Interestingly, Verizon common stock itself as an investment within the master trust is valued at $558.6 million in 2025 for the plan's interest, down slightly from $569.3 million in 2024. This inclusion of company stock is common in employee plans and aligns the employee's interests with the company's performance. Then we have common collective trusts, which represent pooled investment vehicles like mutual funds or ETFs that the master trust invests in. The plan's interest here is substantial, growing from $2.42 billion in 2024 to $3.26 billion in 2025. This growth indicates a strong preference for diversified, managed funds. The filing also details how these investments are valued using a fair value hierarchy. This is how they determine the worth of assets based on observable market prices. Let's look at the assets at fair value as of the 31st of December 2025, under Level 1, which means unadjusted quoted prices in active markets. We see Verizon common stock valued at $3.78 billion. This is a direct reflection of its market price. Then we have Level 2 assets, where inputs are observable but not direct quotes, such as US bonds at $1.27 billion. There are no Level 3 assets reported, which means all investments are valued based on observable market data, indicating a high degree of transparency and liquidity in the plan's holdings. A significant portion of the assets, $24.7 billion, are investments measured at NAV, or net asset value. These are typically commingled funds where the value is determined by the underlying assets of the fund itself, and they are generally liquid. Within those investments measured at NAV, as equity securities are the largest category at $19.45 billion as of the 31st of December 2025. This shows a strong allocation towards the US stock market within the plan's offerings. These are generally redeemable daily, meaning employees can usually move their money in and out of these funds without much restriction. Following up on that, the section on redemption restrictions confirms that many of these NAV-measured investments, like US equity and international equity securities, are readily redeemable on a daily basis. This is important for employees as it provides flexibility for their investments. The plan also uses derivatives, which are financial contracts whose value is derived from underlying assets. The filing mentions they use futures, swaps, and options to manage risk. The gross notional value of these instruments was $5.6 billion in 2025. While this sounds large, it is important to remember that notional value is not the actual exposure or potential loss. The actual fair value of derivative assets was $50.8 million and liabilities were $9.6 million. This indicates derivatives are being used in a controlled manner, primarily for hedging rather than speculation. The Master Trust also engages in securities lending, which is a common practice where they lend out securities to borrowers in exchange for collateral. This generates extra income for the trust. In 2025, the plan earned about $2.5 million from these activities. They had about $957 million in securities on loan and held roughly $987 million in collateral to secure these loans. This is a well-managed process, and the report states no losses were experienced from this activity. As mentioned earlier, the Master Trust holds fully benefit responsive investment contracts. These are essentially guaranteed contracts from insurance companies and banks. The contract value for the plan was $380.7 million in 2025. These contracts offer a guarantee that the value will not fall below 0%, providing a stable, predictable return. The issuers of these contracts are rated highly between AA and I, indicating strong financial backing. The filing also notes certain events could limit the ability to transact at contract value, but these are deemed improbable. There are also related party transactions, which is common in company-sponsored plans. Verizon's own investment management corporation, Vimco, acts as an investment advisor for some funds. However, the report clarifies that Vimco only gets reimbursed for expenses. And any transactions involving entities like BNY, the custodian, or Fidelity, the trustee, are considered exempt from prohibited transaction rules. The plan also includes Verizon common stock, which is also a related party transaction. All these are standard and disclosed. The income tax status section confirms the plan is qualified and its trust is tax exempt, as determined by the IRS. This is crucial for ensuring the tax advantage nature of employee savings. The plan administrator believes they are operating in compliance with tax laws. Finally, under risks and uncertainties, the filing acknowledges that investments are exposed to various market risks like interest rate, market equity price, and credit risks. It states that changes in these values could materially affect participant account balances. This is a standard disclosure for any investment pool. So, what does all this mean for Verizon, its employees, and investors? Looking at this filing, the Verizon Savings and Security Plan appears to be very well managed, the growth in net assets available for benefits, the strong investment income from the master trust, and the prudent use of derivatives and securities lending all point to a stable and robust plan. The inclusion of Verizon stock, while a related party transaction, also aligns employee interests with the company's performance. What I am actually looking for is the continued stability and growth of these employee assets. The fact that the plan is primarily invested in level 1 and level 2 assets with a significant portion in NAV measured funds indicates a focus on liquidity and transparency, which is great for participants. The slight reduction in participant loans also suggests good financial health for the employees themselves. The underlying master trust is substantial, nearing $41 billion in total investments. The planned slice of that, over $6 billion, shows that Verizon successfully offers a valuable retirement savings vehicle to its employees, given Verizon's market position in telecommunications. This kind of benefit helps in attracting and retaining talent. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.